This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer. This AI-generated content is for informational purposes only and should not be considered as investment advice. Omnicell, the story of the autonomous pharmacy. Picture this, a hospital room in 1992. The fluorescent lights hum overhead as a young father watches nurses rush in and out, searching through cabinets, shuffling through paperwork, hunting for supplies while his newborn daughter lies in a hospital bed. Randall Lipps isn't thinking about starting a company. He's thinking about why the people caring for his child seem to spend more time searching for things than actually providing care. This wasn't a moment of entrepreneurial inspiration. It was frustration, worry, and a dawning realization that something was fundamentally broken in how hospitals operated. Lipps understood something profound that day, something that would take the rest of the world decades to fully appreciate. He founded Omnicell in 1992 after observing how inefficiently medical supplies were managed when his daughter was hospitalized at birth. Inspired by his work in airline industry operations and logistics, he sought to enable better management. What made this observation so powerful wasn't just a father's frustration. It was a logistics engineer's lens applied to a problem nobody in healthcare was even measuring. Prior to founding Omnicell, Lipps was Assistant Vice President of Sales and Operations for a division of American Airlines. He had spent years optimizing how aircraft crew and cargo moved through complex systems. In the airline world, you knew where every piece of luggage was, when every flight departed, and exactly how much fuel remained in every tank. Yet in the hospital caring for his daughter, nobody could tell him where a simple supply was located. Under his leadership, Omnicell has grown from offering a single product to delivering the most comprehensive portfolio of medication management solutions across the continuum of care. The company is now building on its success in advanced automation, data intelligence, and expert services to fulfill its vision of the autonomous pharmacy. Today, that frustrated father still runs the company. Randall Lipps has been with Omnicell for over 31 years, driving its growth and innovation in the healthcare technology sector. Omnicell became a publicly traded company in August 2001, and today the company's award-winning solutions are used in over 5,000 hospitals throughout the world and in over 40,000 institutional and retail pharmacies. Omnicell, Inc., NASDAQ, OMCL, is back on traders' radar after a cluster of positive catalysts in late 2025. A new flagship product raised full-year guidance, improving technical momentum and fresh analyst upgrades. As of the afternoon session on December 9th, 2025, Omnicell shares trade around $43.98, giving the company a market capitalization of roughly $1.4 billion. This is a story about the hardest kind of disruption, bringing modern technology to an industry that lives and breathes risk aversion. Healthcare doesn't move fast and break things. Healthcare moves slow and fears breaking patients. Yet somehow, Lipps convinced thousands of hospitals that the greater risk wasn't adopting his technology. It was continuing without it. What follows is the full arc of that journey, from a prototype cabinet in Mountain View to the audacious vision of the autonomous pharmacy, and whether that vision can translate into sustainable shareholder returns. Let's dive in.
The year was 1992, and Randall Lipps found himself in the NICU at the University of California, San Francisco, watching nurses care for his newborn daughter. But as any logistics engineer would, he began observing not just the care itself, but the system, or lack thereof, surrounding it. What nurses were doing all day wasn't nursing. It was hunting. Hunting for supplies, hunting for medications, hunting for paperwork. Lipps observed inefficiency and redundancy during his vigil at his daughter's side. In September 1992, he formed Omnicell Technologies, Inc., to develop software and hardware that would automate processes related to ordering, stocking, tracking, and administering medication. The analogy that burned in Lipps's mind was aviation. He knew that world intimately. His ultimate aim was an end-to-end system that would shepherd medication and supplies along their journey from the receiving dock at a healthcare facility to the patient's bedside. Lipps enlisted the help of graduate students from Stanford University and developed a prototype of a system that automated many of the mundane yet essential tasks performed manually by nurses. Think about what this meant in 1992. There was no Amazon, no Google, no widespread internet commerce. The idea of using technology to track physical inventory in real time was still revolutionary. Yet Lipps saw what the airline industry had already proven, that complex logistics could be tamed with the right combination of hardware and software. With Lipps as the chairman of the company, it began commercially developing automated supply cabinets in 1993. The cabinets were capable of tracking transaction data, inventory levels, expenses, and patient billing. The early product was elegantly simple in concept but revolutionary in healthcare context. The cabinets were essentially computerized vending machines for medical supplies, but with accountability. Every time a nurse accessed a drawer, the system knew who took what, when they took it, and for which patient. This created something that had never existed before in most hospitals: visibility. In 1993, he began marketing his first supply automation systems, targeting single-location community hospitals, government hospitals, and regional and national healthcare giants, setting his sights on the 5,800 acute care hospitals in existence in the United States. The initial traction tells you something important about the value proposition. Sales grew impressively in those early years, nearly tripling in a single year around 1996, which also marked the debut of Omnicell's first pharmacy automation system. That explosive growth, nearly tripling in a single year, demonstrated that hospitals weren't just curious about this technology, they were hungry for it. The problem Lipps identified in his daughter's NICU wasn't an edge case. It was a systemic failure that healthcare administrators had simply accepted as the cost of doing business. Now, someone was offering a solution. While Omnicell began in the supply management side, they did not get into medication dispensing systems until 1996. Like Pyxis, they have launched or acquired other pharmacy automation products, such as anesthesia carts and central pharmacy systems. The expansion from supplies to medications was crucial. Supplies matter for efficiency and cost control. But medications, that's where patient safety becomes existential. A missing Band-Aid is annoying. A missing medication, or worse, the wrong medication, can be fatal. What's remarkable about this early period is how Lipps approached the market. Healthcare technology sales is notoriously difficult. Hospital systems are conservative, committee-driven, and allergic to risk. Yet Omnicell found traction because the problem was so visible to the people who lived it every day, the nurses. And those nurses became internal advocates for the technology. The foundation was set: a founder with logistics expertise, a clear problem, and early product-market fit. But the road from promising startup to public company would require navigating the treacherous waters of the dot-com boom, surviving a failed IPO attempt, and proving that this business could scale beyond early adopters.
By the late 1990s, Omnicell had proven its core concept worked. Hospitals were buying automated dispensing cabinets. Revenue was growing, but Lipps had grander ambitions. And Wall Street was about to complicate them. In September 1999, Omnicell made a decision that now looks quaint, but was entirely rational at the time. The company changed its name from Omnicell Technologies to Omnicell.com, a new corporate banner adopted to hail the launch of the Omnicell Commerce Network 2 months later. This wasn't Lipps losing his mind in dot-com fever. It was a strategic bet. The Omnicell Commerce Network was an e-commerce service comprising 2 web-based applications, OmniBuyer and OmniSupplier. OmniSupplier, designed for use in any nursing area in a hospital department that administered supplies, offered a secure dispensing system that automated the management and dispensation of medical and surgical supplies at the point of use. The logic was sound. If hospitals could order supplies through a web interface that connected directly to Omnicell's cabinet systems, the value proposition expanded dramatically. But then came April 2000, and everything changed. Omnicell filed for an initial public offering of stock in April 2000, but the timing couldn't have been worse. The dot-com bubble peaked on Friday, March 10, 2000. On Friday, April 14, 2000, the NASDAQ Composite Index fell 9%, ending a week in which it fell 25%. For a company trying to go public in the middle of this carnage, it was a disaster. The IPO window slammed shut. Unlike the pure-play internet companies that collapsed entirely, Omnicell had something they didn't: actual revenue, actual products, and actual customers who needed those products regardless of what NASDAQ did. But convincing investors to write checks for new IPOs in 2000 and early 2001 was nearly impossible. Omnicell persevered. In August 2001, Omnicell filed its IPO at $7 per share. That same year, Omnicell Technologies changed its name to Omnicell Inc. In 2002, Lipps assumed the role of CEO, replacing Sheldon D. Asher. The $7 IPO price was modest, a far cry from the eye-popping valuations that characterized the bubble era, but it was real, and it came at a moment when, as noted earlier, only 80 companies went public in 2001, compared to hundreds in prior years. Omnicell was one of the survivors. The return of Lipps to operational leadership in 2002 marked an important inflection point. He had been chairman since founding the company, but had stepped back from day-to-day operations. Now he was back in the CEO seat, and he immediately began executing on his original vision of building that end-to-end system. In August 2003, Lipps took another step toward reaching his ultimate aim by acquiring BCX Technology, Inc., a maker of wireless, handheld barcode scanners that could scan patients' bracelets and verify nurses' identification to authorize and track pharmaceutical dispensation. This acquisition was small but strategically significant. The cabinet systems tracked what happened inside the cabinets. The barcode scanners extended that visibility to the patient bedside. Now you could verify not just that a nurse removed a medication from the cabinet, but that the right nurse gave the right medication to the right patient at the right time. Omnicell controlled roughly 18% of its market in the wake of the BCX Technology acquisition, ranking as the industry's second-largest competitor behind Cardinal Health Inc. The competitive dynamics of this market deserve attention. Cardinal Health owned Pyxis, the dominant player with an estimated 60 to 70% market share. Omnicell was the clear number 2. This wasn't a winner-take-all market. Hospitals often had strong preferences based on existing IT infrastructure, relationships, and specific feature requirements. But being number 2 to a much larger competitor meant Omnicell had to compete on innovation, service, and value, rather than pure scale. Revenues crossed the $100 million threshold and grew steadily through 2006, achieving profitability that year. His efforts directed toward convincing healthcare operators to convert to more sophisticated ways of tracking and verifying the dispensation of pharmaceutical and medical supplies promised to find a large audience. Only half of the hospitals in the United States utilized automated medication and supply systems, providing Omnicell's founder with a wealth of opportunities for growth. That last statistic is crucial for understanding Omnicell's growth story. In 2006, after more than a decade of market development by Omnicell and its competitors, only half of U.S. hospitals had adopted automated medication and supply systems. The market wasn't just about taking share from competitors. It was about converting hospitals from manual processes to automation in the first place. By the end of the 1990s, the company had installed thousands of automated dispensing cabinets across hundreds of healthcare facilities, with sales in the tens of millions. Revenue more than tripled from there by 2006, demonstrating that the penetration thesis was working. The first decade plus of Omnicell's journey established the company as a legitimate public company with consistent revenue growth, profitability, and a clear strategic vision. But the real transformation, from a cabinet company to a platform company, was still ahead.
The story of Omnicell's transformation from a single product company to a comprehensive medication management platform is really a story about strategic M&A. Between 2012 and 2021, Lipps executed a series of acquisitions that fundamentally changed what Omnicell does and how it makes money. In May 2012, Omnicell announced it had signed an agreement to acquire MTS Medication Technologies Inc., a worldwide provider of medication adherence packaging systems, for $156 million. This represented a strategic leap beyond the hospital walls. Omnicell Inc.'s NASDAQ OMCL announced that it had completed the acquisition of MTS Medication Technologies Inc., a worldwide leader in innovative medication adherence packaging systems. The rationale was elegant. With healthcare evolving toward provider organizations that have incentives to be accountable for patients across the full continuum of care, rather than individual episodes of treatment, the combination of Omnicell and MTS was expected to establish a market-leading company that could integrate medication management across that broader spectrum of care. The timing wasn't accidental. The Affordable Care Act was pushing healthcare toward accountable care organizations and value-based reimbursement. hospitals were suddenly responsible for patient outcomes after discharge, including whether patients took their medications correctly. MTS provided Omnicell with a new avenue into providing long-term care solutions through automated medication adherence packaging equipment and consumables that helped healthcare professionals, patients, and caregivers manage adherence to prescribed medication regimens. Non-adherence is a costly, critical problem that drives enormous waste each year and contributes to tragic, avoidable loss of life. MTS's core product was sophisticated blister packaging systems, machines that could sort pills into clearly marked time-stamped packages, making it easier for patients, especially elderly patients in long-term care, to take the right medications at the right times. It also added a consumables business, ongoing revenue from the packaging materials themselves. 2 years later came another expansion, this time into the operating room. Omnicell acquired UK-based Surgichem Limited for £12 million, strengthening its presence in perioperative environments. But the transformational deal came in 2016. Omnicell, NASDAQ, OMCL, a leading provider of medication and supply management solutions to healthcare systems, announced that it completed its acquisition of Ascent Holding Cooperative UA from Ascent Holding, LP and Ascent, Limited on January 5, 2016, pursuant to the terms and conditions of the Securities Purchase Agreement announced on October 29, 2015. The combined company will support approximately 4,000 acute care facilities worldwide, have annual revenues of over $670 million, and have approximately 2,200 employees. Randall A. Lipps, founder, chairman, president, and CEO Omnicell, said, "We are excited to bring together these two companies, providing our healthcare customers with an unprecedented choice of technology. This is a major milestone in the 24-year history of Omnicell as we continue our singular focus on simplifying medication management throughout the healthcare continuum." The Ascent deal was transformative for a simple reason: robotics. The acquisition of Ascent Inc. added pharmacy robots for inventory management, specialized IV compounding robots to remove human error, and pharmacy data intelligence software. The recent acquisition of Ascent adds distinct capabilities, particularly in central pharmacy and IV robotics, creating the broadest medication management product portfolio in the industry. The history of Ascent itself tells an interesting story about how technology finds its way to scale. Founded in January 1989, Automated Healthcare developed and marketed the first-of-its-kind systems that automated the dispensing and administration of medication in hospital pharmacies. The system used robotics to reduce medication errors, as well as decrease the cost of managing the pharmacy function for hospitals. The company successfully deployed robots in hundreds of hospitals for more than 7 years before its first acquisition, by McKesson Automation in 1996. After a few years of developing and selling the Robot RX system, Automated Healthcare was bought by McKesson for $65 million and became McKesson Automation. McKesson, which was a drug wholesaler, was looking to have an automation business because it fit with the wholesaling business, but revenues of $150 to $200 million at a $100 billion-plus business did not have much of an impact. So in 2013, the company was spun out to Francisco Partners, a private equity firm, and the company was renamed to be Ascent. This is a pattern you see repeatedly in corporate history. A promising technology gets acquired by a large company, languishes because it's not strategic enough to the parent, gets spun out, and eventually finds its home with a focused acquirer who can maximize its potential. Omnicell was that focused acquirer. The purchase price paid by the company was approximately $280 million, including the repayment of Ascent indebtedness and after adjustments provided for in the securities purchase agreement. The acquisition was funded with cash on hand and borrowings under the credit agreement. To fund this deal, Omnicell put in place a large, multi-part credit facility with Wells Fargo Securities. In practical terms, it gave the company the borrowing capacity it needed to close the Ascent acquisition and cover the associated costs. An important signal that Omnicell was willing to use leverage to accelerate its push into robotics and a broader platform. The 2020 to 2021 period brought another wave of acquisitions, this time focused on software and services rather than hardware. Omnicell, Inc., NASDAQ, OMCL, a leading provider of medication management solutions and adherence tools for health systems and pharmacies, announced it had entered into a definitive agreement with pharmacy software solutions provider FDS Amplicare to acquire its business for cash consideration, subject to customary adjustments. The acquisition adds a comprehensive and complementary suite of SaaS financial management, analytics, and population health solutions to Omnicell's EnlivenHealth trademark division. The COVID-19 pandemic accelerated major healthcare trends, such as digitizing care delivery, for example, telehealth technologies, and shifting the point of care to a broader range of settings, including innovative hospital-at-home programs and, increasingly, local pharmacies. The FDS Amplicare acquisition was explicitly positioned as a strategic pivot toward higher-margin, recurring revenue software. In simple terms, Omnicell was paying up for capabilities that could scale in the cloud and generate steadier, more predictable revenue than hardware alone. The addition of FDS Amplicare's financial management, analytics, and population health tools, along with a large network of independent retail pharmacies, expanded EnlivenHealth's reach dramatically. With the addition of these new capabilities, EnlivenHealth now offers the industry's most comprehensive suite of digital technology solutions that are proven to help retail pharmacies and health plans grow and succeed in the new digital-driven era of healthcare, said Scott Seidelman, Executive Vice President and Chief Commercial Officer. The decade of acquisitions fundamentally transformed Omnicell from a cabinet company into a platform company. By 2021, the company had capabilities spanning nursing floor automation, central pharmacy robotics, IV compounding, medication adherence packaging, specialty pharmacy management, and retail pharmacy software. But this transformation came with execution risk. Integrating this many acquisitions across this many product lines, serving this many different customer types is extraordinarily difficult.
In any business, there's a difference between strategy, what you're doing, and vision. Why you're doing it and where it's all headed. For Omnicell, the vision crystallized into a phrase that now guides everything the company does: the autonomous pharmacy. The analogy that Lipps and his team use is brilliant in its simplicity: aviation. Similar to the airline industry, where planes were once dependent on human pilots, planes today can fly on autopilot through automated flight control processes. The vision of autopiloting processes is the premise behind Omnicell's goal to fully automate the pharmacy care delivery model. The autonomous pharmacy is a bold new vision for the future of medication management that seeks to replace manual, error-prone activities with automated processes that are safer and more efficient. Just as autonomous vehicles have a framework, Level 1 through Level 5. For measuring automation capability, Omnicell and its industry partners developed a similar structure for pharmacy. The advisory board has coalesced around the clear vision of a fully autonomous pharmacy. It has developed a framework that identifies 5 levels of increasing technological capability and work process improvement spanning 9 pharmacy work processes. The ultimate goal is near error-free medication management that optimizes the benefits and minimizes the harm and costs of medication use. Omnicell developed the autonomous pharmacy framework in a similar stepwise fashion to the autonomous vehicle model, a multi-level approach from current systems to full realization of the autonomous pharmacy. This isn't just marketing. Leaders in health system pharmacy have joined together on the Autonomous Pharmacy Advisory Board with the mission of transforming the pharmacy care delivery model through the use of technology to achieve the fully autonomous pharmacy. The Autonomous Pharmacy Advisory Board is a coalition of health system pharmacy leaders, nursing leaders, and pharmacy informaticists who have established a 5-level framework to help health systems develop a strategic roadmap to achieve a fully autonomous pharmacy in key areas like enterprise structure, data intelligence, automation, IT infrastructure, and human activity. The business implications are significant. Nearly 50% of the top 300 U.S. health systems, as defined by the Definitive Healthcare, are partnering with Omnicell on the autonomous pharmacy journey, a roadmap to develop a zero-error, fully automated medication management infrastructure. Industry leaders have coalesced around a roadmap to develop a zero-error, fully automated medication management infrastructure through a combination of hardware, software, and technology. Enabled services designed to help providers to improve quality, reduce costs, and increase human efficiency, explains Lipps. This framework serves multiple purposes. First, it provides a shared language for hospitals and Omnicell to discuss their automation journey. Second, it creates a natural upgrade path. Hospitals at level 1 have a clear roadmap to level 2, and so on. Third, it positions Omnicell as the partner for this journey, not just a vendor. The real-world impact is measurable. Texas Children's Hospital, TCH, one of the largest pediatric care hospitals in the United States, leverages Omnicell technology to support efficient medication management for its mother, baby, and pediatric patient populations. TCH now has about 95% real-time visibility into their inventory, resulting in a 16% reduction in medication management costs and annual savings worth millions. The autonomous pharmacy, while it's one vision, it actually has multiple layers incorporated with it. So first, there's a cloud data platform, and that's important to create integration and allow us to have advanced analytics. Second, there is also an element of automating our workflows, and that's important because it allows us to minimize our reliance on human touchpoints and interactions, and allows us to reduce repetitive tasks. And then the third element of the autonomous pharmacy is the extensive use of data intelligence. And all of these are important because having automation is important, but automation alone is not going to be enough. The scale of the problem is enormous. The cost of medications comprises 1/7 of all healthcare spending, a whopping $508 billion per year. Today's medication use process involves many inefficient manual work processes. These work processes are complex, highly variable, and error-prone. The way we currently operate puts everyone involved at undue risk. One former chief pharmacy officer at the University of Michigan conducted an internal audit and found that the organization was supporting dozens of separate systems just to keep the medication use process running. Very few of those systems talked to each other, which meant staff had to bridge the gaps manually. An error-prone, labor-intensive way to run something as mission-critical as medication management. This fragmentation represents Omnicell's opportunity and its challenge. The vision is compelling, but executing against it requires integrating dozens of systems, changing deeply ingrained workflows, and convincing risk-averse healthcare systems to trust automation with medication management.
Every company eventually faces a crisis that tests its resilience. For Omnicell, that test came in 2022, and it arrived in multiple forms simultaneously. On May 4th, 2022, Omnicell determined that certain of its information technology systems were affected by ransomware impacting certain internal systems. The company disclosed the attack in an SEC filing, immediately triggering concerns about both operational impact and data security. Omnicell experienced a ransomware attack last week, according to forms the company filed with the Securities and Exchange Commission on Monday. Omnicell, which sells pharmacy and medication management technology to healthcare organizations, on May 4th discovered some information technology systems had been affected by ransomware. Some products, services, and internal systems have been affected, according to the filing. Medication management devices used by customers, such as automated dispensing systems and robotic equipment, have not been disrupted by the attack, based on the company's assessment. The fact that customer-facing medication management devices weren't disrupted was crucial. A ransomware attack that knocked out medication dispensing in hospitals could have had life or death consequences. But the attack still represented a significant operational and reputational challenge. The company took a series of measures to safeguard the integrity of its information technology systems, including working with cybersecurity experts to contain the incident and implement business continuity plans to restore and support continued operations. The timing couldn't have been worse because the ransomware attack arrived amid a broader storm of headwinds. On the earnings call, Omnicell founder and CEO Randall Lipps chalked up the lowered guidance to headwinds in the industry, from labor challenges to health system capital budget freezes and delays. The stock reaction was brutal. Shares fell sharply over the course of the week, sliding from the high $70s to the low $50s and briefly touching the high $40s. In other words, investors rapidly repriced the business as the ransomware disclosure collided with an already weak demand environment. The numbers tell the story of a company caught in a perfect storm. The persistent inflationary headwinds, primarily due to semiconductor and other components costs, continue to pose challenges and induce the company to slash its 2022 guidance. Omnicell delivered results generally exceeding our revised outlook for the fourth quarter and full year 2022, in the face of continued headwinds and macroeconomic uncertainty, said Randall Lipps, founder, chairman, president, and chief executive officer of Omnicell. Peter has played an important role in scaling the company from nearly $500 million in annual revenue to $1.3 billion in 2022. The CFO transition added to investor concerns. Omnicell also announced today that Peter J. Kuipers will step down from his role as Executive Vice President, Chief Financial Officer, effective July 1, 2023. The challenges continued into 2023. Randall Lipps, Chairman, President, Chief Executive Officer, and founder of Omnicell, said, "The team delivered strong cost management and operational discipline this quarter. However, I am disappointed with the weakness in demand that we are seeing, and accordingly, we have updated our near-term outlook. We are taking actions to manage the business that are intended to reduce our cost structure and to better align with our anticipated top-line performance heading into 2024, while also positioning the company to continue investing in our innovation agenda." The company was forced to take difficult actions. On November 23rd, Omnicell committed to a plan to reduce headcount as part of expense containment efforts in response to ongoing macroeconomic headwinds. The cuts were broad-based across functions and aimed at resizing the cost structure to match weaker demand. Investors in Omnicell, NASDAQ, OMCL, have endured a harrowing 3-year journey, with shares plummeting 74.58% from their 2022 peak. For long-term investors, the question became, was this a temporary setback caused by macro headwinds or evidence of deeper structural problems in the business? The answer would determine whether the beaten-down stock represented an opportunity or a value trap.
By late 2025, the narrative around Omnicell had shifted. The company that seemed on the ropes in 2022 and 2023 had shown signs of stabilization and was now launching what management believed could be a transformational product. On December 8, 2025, Omnicell announced the launch of Omnicell Titan XT, a transformational enterprise version of automated dispensing systems, ADS. Designed to unify proven automation and powerful intelligence, Titan XT will deliver an enhanced and more efficient medication management experience to support a growing health system. The introduction of Titan XT marks a significant milestone for Omnicell and the journey to cloud-enabled autonomous medication management, said Randall Lipps, Chairman, President, Chief Executive Officer, and founder of Omnicell. Starting with nursing floors, we are now focused on integrating every care area into the Omnisphere platform to build what we believe will be the most complete connected automation ecosystem in healthcare. The strategic importance of Titan XT lay in how it connected hardware with cloud services. Titan XT delivers an intuitive user experience through proven automation powered by Omnisphere, the company's cloud-based, HITRUST-certified medication management platform. Omnisphere's unique capabilities are engineered to unify user management and task guidance, enable a global formulary, and support perpetual inventory management to create a fully connected, enterprise-wide medication management ecosystem. The new Titan XT integrates with Omnisphere, Omnicell's cloud-based, HITRUST-certified medication management platform, and will primarily replace older XT systems that were introduced in 2017. The system will initially be configured for nursing floors with availability starting in the second half of 2026. Omnicell plans to price Titan XT at a premium compared to current XT systems, citing Omnisphere's enterprise-wide visibility and enhanced control of medication inventory management as key value drivers. Titan XT is now available for purchase in the United States and anticipated for international purchase later in 2026, with ongoing Omnisphere releases beginning in early 2027. The market response was positive. On December 9, 2025, Benchmark reiterated its buy rating on Omnicell and raised its price target, explicitly citing the Titan XT launch as a driver for growth and product momentum. The financial picture has improved significantly from the 2022 to 2023 lows. In other recent news, Omnicell reported impressive third-quarter 2025 earnings, exceeding analyst expectations with an earnings per share of 51 cents, surpassing the projected 36 cents. Full-year 2025 revenue guidance raised to $1.187 billion, up from prior ranges and reflecting solid demand into year-end. Strong liquidity and capital structure. Omnicell exited the third quarter of 2025 with more cash on the balance sheet than debt. In plain English, it had room to keep investing, withstand volatility, and avoid having the balance sheet become the story again. Omnicell's service business is rapidly growing, now 22% of revenue, outpacing industry trends and supporting long-term upside. The bull case for Omnicell centers on several converging factors. Structural trend. Hospitals and health systems are under pressure to cut costs and reduce medication errors. Automation plus analytics is not a fad, it's a long-term trend. Platform ecosystem. Omnicell is gradually shifting its revenue mix toward recurring SaaS and services, which, if executed properly, can support higher margins and more predictable cash flows. Outside the United States, healthcare providers are becoming increasingly aware of the benefits of automation. Many government and private entities are aware of the progress made over the last several years in the United States and are investing significantly in information technology and automation. The company's international operations include its sales efforts centered in Canada, Europe, the Middle East, and the Asia-Pacific regions. Given the fact that the international market is less than 1% penetrated, with very few hospitals adopting medication control systems, Omnicell intends to expand into new markets, which it views as strategic.
No analysis of Omnicell would be complete without understanding who it competes against and what competitive dynamics define this market. The competitive landscape in pharmacy automation is both consolidated at the top and highly fragmented below. The ranking of companies in the pharmacy automation market has been determined through a market share analysis, conducted after thorough secondary research and validated by primary respondents. This ranking considers parameters such as revenue generated from pharmacy automation solutions, product portfolio breadth and depth, innovation, and approvals and launches. Based on this analysis, the top 3 players leading the market are Becton, Dickinson & Company, BD, US, Omnicell, Inc., US, and KUKA AG, Swisslog Healthcare, Germany. These companies dominate due to their strong market presence, extensive product portfolios, and continuous innovation in the pharmacy automation market. The global pharmacy automation market is poised for steady growth, more than doubling over the coming years. The market leader deserves special attention. Becton, Dickinson & Company, BD, US. BD is a worldwide manufacturer of high-quality pharmacy automation solutions that reinforce its market position via organic growth strategies like investments in research and development activities. BD owns the Pyxis brand, which has historically dominated the automated dispensing cabinet market with an estimated 60 to 70% market share. Omnicell is among the most dominant companies in the pharmacy automation sector. The firm has a very wide line of pharmacy automation systems with high brand value that has enabled it to establish a competitive advantage in the pharmacy automation sector and a leading global position. The firm has a focus on inorganic expansion through acquiring firms. The key competitive dynamics reveal several important factors. The pharmacy automation market is consolidated at the top, with a large number of leading market players based in developed countries. The key players operating in this market are Becton, Dickinson & Company, US, Omnicell, Inc., US, KUKA AG, Swisslog Healthcare, Germany, Baxter International, Inc., US, Capsa Healthcare, US, Oracle, US, Uyama Company, Limited, Japan, Arxiom, Inc., US, McKesson Corporation, US. The market structure creates both challenges and opportunities. North America is the largest market for pharmacy automation, with a share of 41% market share in 2025, as key market players are focusing on the launch of new products in the region. Regulatory bodies such as the FDA, DEA, and HIPAA have set strict guidelines for medication management, pushing pharmacies and healthcare institutions to integrate automation to ensure compliance and reduce medication errors. Omnicell faces intense competition in the medication management and supply chain solutions market. Even though the company continues to gain market share from other traditional providers of medication management and supply chain solutions, major players pose threats as they spearhead several expansion programs. This increased competition could result in pricing pressure and a reduced margin, negatively affecting the company's performance. From a Porter's Five Forces perspective, the pharmacy automation industry has several notable characteristics. Threat of new entrants, low to moderate. Healthcare IT is notoriously difficult to break into. The sales cycle for Omnicell's automation systems is long and can take more than a year. This is due in part to the cost of the systems and the number of people within a healthcare facility involved in the purchasing decision. This creates natural barriers for new entrants. However, well-funded technology companies could potentially disrupt the market with new approaches. Bargaining power of buyers, moderate. Large hospital systems have significant purchasing leverage and can negotiate favorable terms. However, once systems are installed, switching costs are high, which limits buyer power after initial purchase. Bargaining power of suppliers, low to moderate. Omnicell sources components from various suppliers. The 2022 supply chain challenges highlighted some vulnerability here, but generally suppliers don't have extraordinary power. Threat of substitutes, low. There's no real substitute for pharmacy automation other than manual processes, which are increasingly unacceptable from a safety and efficiency standpoint. Competitive rivalry, high. The top 3 players compete intensely for market share, particularly on product features, service quality, and pricing. From Hamilton Helmer's 7 Powers framework, Omnicell's competitive position rests primarily on switching costs. Once a hospital system installs Omnicell cabinets, integrates them with its EHR and pharmacy systems, and trained staff, switching to a competitor is expensive and disruptive. This creates significant customer lock-in. Scale economies. As the number 2 player behind BD, Omnicell benefits from scale in R&D, manufacturing and service delivery, though not to the same degree as the market leader. Network effects, emerging. As Omnisphere connects more customers and generates more data, the platform's value proposition could strengthen through better benchmarking and predictive analytics. The international opportunity remains largely untapped. The company's international operations include its sales efforts centered in Canada, Europe, the Middle East, and the Asia-Pacific regions. Given the fact that the international market is less than 1% penetrated with very few hospitals adopting medication control systems, Omnicell intends to expand into new markets. For investors tracking Omnicell, several KPIs deserve particular attention. 1. Services revenue as a percentage of total revenue. This metric captures the company's transition from a hardware-dependent model to a recurring revenue model. Omnicell's service business is rapidly growing, now 22% of revenue. Tracking this percentage over time reveals whether the company is successfully executing its platform strategy. 2. Advanced services. Annual recurring revenue, ARR. Within services, the advanced services segment, which includes SaaS solutions, analytics, and managed services, represents the highest quality recurring revenue. Advanced services is expected to comprise approximately 20% to 30% of total revenue by 2025.
After 3 decades of building Omnicell into a billion-dollar company, Randall Lipps and his team face a familiar challenge, proving that past success can translate into future returns for shareholders. The investment case for Omnicell today hinges on several key debates. The bull case. The structural thesis remains compelling. Hospitals and health systems face relentless pressure to reduce costs, improve outcomes, and address staffing shortages. Automation and analytics directly address all 3. The market opportunity is enormous and still early in penetration, particularly internationally. Omnicell is well-positioned competitively. Platform ecosystem. Omnicell is gradually shifting its revenue mix toward recurring SaaS and services, which, if executed properly, can support higher margins and more predictable cash flows. Product refresh cycle. Titan XT can spark replacement cycles among existing customers and open doors with new ones, especially if it integrates tightly with Omnicell's cloud and analytics tools. The financial foundation has improved. Strong liquidity and capital structure. Omnicell exited the 3rd quarter of 2025 with more cash than debt on the balance sheet. This financial flexibility gives management room to invest through cycles and pursue opportunistic acquisitions. The autonomous pharmacy vision provides a compelling strategic framework. Nearly 50% of the top 300 U.S. health systems are partnering with Omnicell on this journey, creating a large base of customers with natural upgrade paths. International expansion. Omnicell is targeting overseas markets where medication control and automation adoption are still relatively low, which could provide a long runway for growth. The bear case. Execution risk remains high. Omnicell's 74.58% stock decline over 3 years and erratic earnings underscore fundamental challenges. The company has repeatedly disappointed on guidance since 2022, raising questions about management's ability to forecast its own business. Competition is fierce. BD remains the dominant player with Pyxis and continues to invest heavily. This increased competition could result in pricing pressure and a reduced margin, negatively affecting the company's performance. Healthcare. IT sales cycles are brutally long. Omnicell's automation deals can take more than a year, which limits revenue visibility and means economic weakness can quickly translate into delayed or canceled decisions. Macro headwinds may persist. The broader U.S. and global economy are facing elevated inflationary pressures, continued supply chain disruptions, labor shortages, and geopolitical instability. Hospital capital budgets remain constrained in many systems. The SaaS transition is unproven. While the strategic logic of shifting to recurring revenue is sound, execution is another matter. Many industrial companies have stumbled trying to transform from hardware sellers to software platforms. Valuation context. The firm has a market cap of roughly $1.4 billion. The consensus analyst rating is hold, with an average 12-month price target among analysts that have covered the stock in the last year is $43. The valuation is not dirt cheap, but not euphoric either. Outcomes will hinge largely on execution and margin improvement over 2025-2026. Analysts see upside potential in the stock. However, this optimism is tempered by inconsistent earnings and lingering margin pressures.
The story of Omnicell is, at its core, a story about one man's observation in a hospital room 3 decades ago, and his persistent effort to solve a problem that nobody else seemed to notice. That founding insight, that hospital logistics were decades behind other industries, proved correct. The company Lipps built has grown from a single product to a comprehensive medication management platform, serving thousands of hospitals and tens of thousands of pharmacies worldwide. The journey hasn't been linear, from surviving the dot-com crash to navigating a ransomware attack to weathering post-pandemic hospital budget constraints. Omnicell has demonstrated resilience. The question now is whether that resilience can translate into sustained shareholder returns. The vision of the autonomous pharmacy represents perhaps Omnicell's most ambitious bet. Omnicell's vision is a healthcare system defined by zero-error medication management, delivered through the autonomous pharmacy. Whether this vision becomes reality, and whether Omnicell captures the economic value of that transformation, remains to be seen. What's clear is that the problem Lipps identified in 1992 remains far from solved, and international penetration remains minimal. The market opportunity is real. The competitive dynamics are challenging, and the execution requirements are demanding. For investors, the critical question isn't whether pharmacy automation matters. It clearly does. The question is whether Omnicell, with its 30-year head start and comprehensive product portfolio, can outcompete larger rivals, execute its platform transformation, and deliver the consistent growth and profitability that would justify its current valuation. As of the afternoon session on December 9, 2025, Omnicell shares traded around $43.98, giving the company a market capitalization of roughly $1.4 billion. The launch of Titan XT represents a potential inflection point. The introduction of Titan XT marks a significant milestone for Omnicell and the journey to cloud-enabled autonomous medication management, said Randall Lipps. Starting with nursing floors, we are now focused on integrating every care area into the Omnisphere platform to build what we believe will be the most complete, connected automation ecosystem in healthcare. Whether that belief translates into shareholder value is the question that will define Omnicell's next chapter, and determine whether Lipps's 3-decade journey has been worth the ride for those who have joined him along the way.
This podcast is brought to you by Empor.top, the stories of top companies. Disclaimer: this AI-generated content is for informational purposes only and should not be considered as investment advice.